Hi there, good morning. This is Oyen. This video is for the AS students. I'm putting a series of videos together really for us to be able to finish your syllabus, just to make sure that's done and tied up, if you like, really before the weekend, so that over the weekend you can really start your general revision. I mean, we're still analyzing and evaluating, of course, but you still need to be reading, of course, for the entire paper. So I just want to make a couple of videos on the last two chapters so that we just clear that out of the way, and you can hopefully start just getting on with the material. Okay, so I will try and make them short, and there'll be a series of them so that at least that helps and holds concentration. We started talking about break-even analysis, didn't we, yesterday? And what I'm just going to do is, if you like, summarize what I was talking about, and I will be referencing your textbook, so you will need your textbook whilst we go through these videos. So really, in essence, this is really a class, so to speak, but you're having it on your own. Right. So let me just I'll just go to a new page. What I did was to kind of give you an example, a practical example of break-even, talking about the portions of chips and talking about the selling prices of those chips. And I'll just go through that again very briefly. And if you remember the idea, I said to you that you had a scenario where someone had to pay rent of £1,000 for the week. And I said to you that the actual variable cost, or the direct cost, yes, the variable cost or the direct cost of actually making the portion of chips was £10. And then I said that you could actually sell this portion of chips, if you like, £20, which gave you, and we all seem to know what I was talking about, what we refer to as a contribution of £10. And then I asked you how many portions would I need to sell in order to make me meet my fixed cost, and you said to me, well, oh yeah, that's pretty obvious. That is 100 portions. And so how did we, in essence, really get that number? You must have said 1,000 divided by £10, which, if you're looking for a formula, this would be the fixed cost divided by your contribution. When I say contribution, in other words, I mean your selling price minus your variable cost. So really, this is your contribution. So this is a formula, if you like, for finding break even. And the whole point I discussed of doing this was so that management accountants can actually plan, because businesses go through a cycle. The first main objective of a business is survival. So before we even start talking of profit, we must break even first. And we know that, therefore, it means the characteristics of break even will be that at break even, there are no profits and there are no losses at break-even. We also know, therefore, at break-even that total contribution must be equal to fixed costs. I mean, when I sell 100 portions of chips, I will have this. I will have 2,000, take away my variable cost of 1,000, giving me my total contribution of 1,000. Then I will take away my fixed cost of 1,000, giving me no profits at all. So at break-even, contribution is equal to the fixed cost. Right. So this was kind of the general idea, and it's important to be able to, and it's also important to actually also know what the graph looks like, if you like, and we can build one up. But let's just let's sort of see where we are, and let me take you to a graph. These are just some notes. I'm not really going to use them. But we talked about variable costs and fixed costs. We're talking about break-even, and we're going to look at the break-even analysis based on the graphs. We won't do all what you see at the bottom. This is just a slide to help me. I define fixed costs for you, things that remain, if you like, fixed over a certain range, and I've discussed how that could become, if you like, a stepped cost if we continue to need a fixed cost like a supervisor or a new place to store our products. Variable costs will change, of course, because these are our direct costs, if you like, so to speak. Yes, and these will change with output levels as well. So classic examples of these, of course, are material and labor. Right. And of course, this idea of a semi-variable cost we also discussed, and I have now discussed this idea of a break-even point. And this is an example, but we've already done one, so there's nothing special with that slide. So you can actually build a break-even table, and let's just see how to do this. I mean, you don't have the data, but what we can do is we can create a table, and we can, I mean, the clear thing here is, right, that whatever number of outputs, over a range of outputs, if you like, and if you imagine this will be your x-axis, over a range of outputs, you will have, if you like, for example, we're going to see in a second. So you can have what would happen if I sold 10 units, 20 units, 30 units, 40 units, and you can keep going. Your fixed costs, as you can imagine, will stay the same, of course, over these units. Your variable costs, of course, will increase with these units. And then, of course, the total cost of making anything must be the fixed cost and the variable cost. So we can add A, if you like, and B together. Of course, we can find the revenue, which will, of course, vary with our output, and we can find what the profit and loss is. So you can see here's an example of the outputs. We're making 100, 200, 300, 400, 500, 600, 700 units. Of course, the fixed cost will stay the same, like I said. And at £10 a unit, this is the variable cost, and this is direct material and direct labor. We see a scenario where we have 10 times 100. Of course, that's 1,000. 10 times 200, 2,000. And we just go on, if you like. And of course, if I find the total cost, you will see the total cost increasing. Yes, of course. Now, when I sell, well, of course, I'm selling at £30. If I'm selling at £30, I'm selling my units, and you can see that increasing as well. And of course, I can find my profit and loss. And you can see somehow there is a point where we actually make no gain or loss. And this, you can see already from my table, is my break-even point right here. Right, and so, and they're highlighting that already for you as well. That's where the break-even point is. Now we can plot the graph of this. Now you can see here, it says here very clearly, costs and revenues. So on the y-axis, we have costs and revenues. And on the x-axis, we have the units of the output that we've just discussed. And so what can we do? That's our fixed cost right there. We are quite happy with that. That's at 10,000. Doesn't matter what happens. Right now, this right here must be our total costs, right? Because that's if I go back, right, if at zero, when I make 0 units, I still have to bear the fixed cost of a 10,000. And when I made, if you like, 100, that would be, if you like, the fixed cost plus the variable cost. So really, my variable cost would look like this if I was building it. We just don't build one because we don't really need it. And then this just, in terms from a math point of view, this adding the fixed cost, adding this graph to this graph, adding this graph, just shifts the whole thing up, doesn't it? By the fixed element of 10,000, right? So it's like whatever y is equal to x. If you have y is equal to x, which is what I have right now, once you say y is equal to x plus 10,000, it just shifts the entire curve up. It just shifts the entire curve up from a mathematical point of view. But then there's nothing mathematical so much about this, because what we're really saying here is y is total cost, and that's your variable cost. So your variable cost add on 10,000, it increases. Okay, and then you have your variable cost there, of course, making your total cost there, and then of course you have your total revenue, your sales revenue. And at some point we can see here very clearly where sales revenue meets total cost is where we break even. So that's your break even point, right? And a couple of little kind of additional points they give you is, of course, this must be an area of loss. This must be an area of profit. I'm trying to keep this under 10 minutes. So you can see the key point. What I was really trying to show you there was this, the graph, which you must be comfortable with. No one will ask you to plot one, but you will definitely, or you might be asked to label one. Right. So what I will do is I'll end this video there, and then I'll move in the next video. I'll talk about the limitations of break-even and the issues with break-even. So I will keep these under 10 minutes. Okay, great stuff. See you in the next video.